Yo, what's up, you guys? Welcome back to another weekly market breakdown where we basically do take a look at the market from both a technical and a fundamental perspective. If you are new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. And if you enjoy the content, please do consider smashing that thumbs up button there as well. Now, we obviously know we had some very important news that came through last week, such as the unemployment rate as well as the NFP data and some unemployment claims as well. But one thing I want to show you guys is important, why it is so important to understand fundamental data. If we go back to this video that I did, this video was done 6 days ago, right? If you look at the subtitles over here, you can see exactly what I said here. Unemployment rate, because we have seen less people are filing for unemployment claims week over week, so it would be good to see unemployment come a little bit further down, and that is exactly what the market had done. We can see that the unemployment basically dropped by 0.1% as well. Markets now anticipate for the Feds to not hike the interest rates, thus giving a bearish outlook for the dollar index. But that is why it's so important to go over the content that I have created, which is located in the educational section, where you will basically understand how to read fundamental data and how to apply it in the market as well. Let's go through some of the questions that we receive here as well. Bongo is saying, nice one for the sort that was posted. Good morning, Mr. Zach. How do I get in contact with you? Desperately need your guidance. Can you just be more specific in terms of what it is that you do need? Because I do not provide any services on any time frame, always on any time frame. Because remember, on the market structure video that I have explained, we basically take the same concept and we just apply it on a lower time frame there as well. We've got calm, soothe, and in reads. You're no longer offering signals. No, I do not. Mr. Motang is saying, yes, it is not the first time you're doing. Have water by your side. You will be better soon. Yeah, I do cough now and then on some of the videos. It depends on what it is that I was doing before I do that. I normally either run or I would be working out. But today I haven't done any of those things, so I should be good to go. But thanks for the concern. Confessance is saying I've been blowing accounts. That is very, very, very sad to hear. Yukti is asking, I really awesome content. Just a quick question. Is it safe to assume that the dollar pullback will create the inverse to the indices upward trend? No, actually, yes. But not so much for the Dow Jones. You also just need to, like I said before, just need to always make sure that you follow the news, not the news, the earnings report that is allocated or that is associated with that as well. Okay, so let's look at some of the information that we received last week. Obviously, we got some negative PMI, we got some positive ADP compared to the previous week. The reason why you will see it go from negative to positive, from a higher number being negative to a lower number being positive, because this is basically all jobs related, and just like the unemployment rate, a lower automated data processing reading is always a good indication that the unemployment rate is more likely to come down. We also had some unemployment data that dropped also. NFP, the market did not meet the expectation, but it did come through higher than the previous months. And then the average hourly earnings month over month also maintained the same, although the market anticipated it to be lower. Next week we've got some CPI data. Very good to see what the Feds are going to do there. We've got some more unemployment claims and core CPI. But this is the main news that I will be looking for out next week, which is the CPI. It's an indicator that investors use to measure inflation in the market. Now, let's go over to the dollar index. Now, the outlook for me on the index is going to be bearish. So that is exactly what it is that I'm going to look for. But before we get over here, let's look at some articles from CNBC. This is based on the S&P 500 and the NASDAQ. It says it stumbled 4 straight days, notching a worst week since March. It says here the S&P 500 and NASDAQ basically slumped Friday for a 4th straight session and not the worst week since March, as traders seem to book profits following the least corporate's earning release and US jobs data. Now, the reason why you see that happening is now is the market is obviously anticipating the Fed is less likely to hike the interest rates, but that can once again change once we get the inflation data that's coming through next week, Thursday. That says your all major indexes reversed earlier gains during an afternoon trading and finished the week with losses. The NASDAQ, the S&P 500 dropped 2.9% and 2.3% respectively as well. It says here people this week seem more respectful of the risk than they were before, said Steve Nosnik, chief strategist at Interactive Brokers. And then they basically wrote an entire article over here. Next up, we're going to look at some gold. It says your gold gains as the dollar index yield ticks lower after jobs data. It says your gold prices were up on Friday after a weaker dollar. Jobs reports boost the dollar and treasury yields lower, offering some respite to bullion, which was still on track for its worst week in 6. It says the NFP was up by 187k jobs. The Labor Department said in its closely watching employment report, economists polled by Reuters expected it to be 200,000 there as well. It says here the job report has allowed the market to propose that the Fed is not likely to hike the interest rates, and that's kind of the indication that I basically needed to make before I continue that. If the Fed is less likely to hike the interest rates, the index is more likely to make a U-turn. Now we're going to look at the weekly time frame. Firstly, we can obviously see that the market had broke below this level of support, came back to test it as a resistance. Now the next point of reference for me for the index is going to be sitting at this level over here, and the reason for that level is because this level over here also acted as a level of previous support. The market then broke above this level of support. The market broke above this level of support, and we can expect it to come back and test it as acted as resistance. The market then broke above that, and we can expect the market to pull back and test this level as support. Now if we go on the daily time frame, we can see over here that the market had obviously started this pullback, and this is the structure that we need to basically monitor. I do expect a slight pullback for the dollar, slight pullback, and then a continuation to the downside. The pullback already started, so I don't think there's going to be much left. The market could potentially start to fall from exactly where it is there as well. Next up, we've got Euro USD has done very well after the jobs report was released. What we have over here is we got a market that also broke below support, came back, tested it as resistance, printed an equal high. Now I do expect a slight pullback going into next week, and then that continuation to the upside. In doing so, will the market print this inverted head and shoulders pattern? Now an inverted head and shoulders pattern is considered a bullish pattern from a technical perspective. Next up, we've got the NASDAQ. Now the NASDAQ is very much overbought. If you understand what that means, it means that the price is trading at some premium levels over here, and there's obviously the pullback that we would have liked to see over here as well. However, if we go down on the daily time frame, we can obviously see, although we anticipate the market to continue slightly higher, the market still has a gap that we expect the market to fill here as well. Now what the market had given us basically is a break below this level of support, and then came back to test it as resistance. Then you can see how this market started this move to the downside. If you go down on the 1 hour time frame, you can see that this is basically the price that I expect the market to come in full in here as well. So if you go on the daily time frame, we can firstly see the market is currently testing a previous resistance over here that the market had broken above. It's back to test it as support once again. Now the only way for the market to go up that high is obviously we need to get a break above this previous level of support, and then from there we can obviously start monitoring the price action from there for the market to fill that gap in over there, and then from there we could potentially see a downward move spiral. Next up, we've got gold. Now gold obviously gave us this level over here that it had broken above, as you can see. But if you go down on the weekly time frame, the market had printed what's known as an inverted head and shoulders pattern, and once again this is considered a bullish pattern from a technical perspective. I do expect the market to continue higher here and then continue that move to the upside to go back to that previous high that it had created in the market there as well. If you go down on the daily time frame, once again what we have over here is we got a market that is currently testing previous support as resistance. Basically all we need to see is a clear break above this level, a daily close, a pullback, and then we can definitely ride this continuation to the upside. Then you can see here the market had also created structure around that level that we anticipate the market to go and hit. Next up, we've got GBP USD. Now GBP USD, the Feds, not the Feds, the Bank of England also started with that rate hikes there as well. If you go down on the weekly time frame, what do we have here? From a weekly perspective, the market is currently testing previous support as resistance. This is basically where I would start monitoring the price in the market here as well. As this level over here acted as a level of support, the market broke below that. It's now back to test it as resistance once again. Now I would like to see the market start this move to the upside there first, and then from there we can then once again start monitoring the price action and see what kind of market momentum we get from there once again. Next up, we've got the US30. US30 had printed what's known as an overextended information. After an overextended information, what you generally look for is a pullback to the left leg, and the left leg in this case is also a previous level of support that's lining up perfectly with resistance here once again. Now the best way to approach this is obviously looking at the market printing a clear impulse. After an impulse, you do expect a correction, and we can see over here the market had also we've got a 50% pullback there also. One thing that you do need to keep in mind is we also have a gap on the Dow Jones that the market never came to fill in here as well. So there's obviously another way for us to go into this as well. If we don't get the kind of price action we're getting at this level, then we can definitely expect this market to first go and fill in that gap, and then once again we can start monitoring the price action from there. If the market starts acting very bearish around that level and the price action shifts, then we can definitely start looking for that short-term sell to this previous level of resistance that is now acting as a level of support. That is all from my side, guys. Thank you for your time. Enjoy the rest of your weekend, and as always, cheers for years.